Good morning, everyone. All right, let me get this link shared out for this live stream. All right. Do Telegram first. Now Discord. I'm actually going to share it in the members channel too, because some only have notifications there, and I'll share it on Twitter. All right, where are my charts here? So Bitcoin's tapping some important resistance now. We're coming into the New York Open soon. I am somewhat likely to trade this. So anyways, this is something I do occasionally for members, and I've done them occasionally for public, is a trading session live stream. I like to trade the New York Open. Just to recap, I am long off of these lows. I'm long off of, actually my long trigger for my latest long was waiting for the sweep of the lows. We had this kind of bearish structure forming on the low time frame. I was looking for a sweep of the lows here. We had bearish absorption. Anyways, we got that sweep, and as soon as we broke up out of here on this low time frame, that was my long trigger. Obviously, if you've followed some of my analysis for a little while, I've had some bullish ideas from here on ETH and Bitcoin, which obviously is going to take the rest of the market with it. So with the main idea coming down and tapping the 123.7 extension down here, the 382, as we consolidated here, that started to look quite good for some Elliott wave ideas. Looking like this. So anyways, the longs are playing out. Yesterday we had some bearish absorption forming on this range. I took a head short, but I pulled the short as we came back and retested this support with bullish absorption. So I'll just, actually I'm going to, this will be good for people that are curious how the Discord kind of works. But so yesterday I was pointing out, still in a head short, as we had that bearish absorption. That's what I just pointed out last night. And then last night, I guess around the daily close, I said local CVD getting slightly bullish, closing head short for now around break even. It's actually slightly under break even, so it was I guess a slightly profitable hedge. But the whole premise of the short was the bearish absorption, which of course flipped bullish, which I'm pointing out here. So head short makes sense. As we retrace, stops making sense, bullish absorption, and we get that big impulse off of there. But anyways, if I take a short here during the New York Open at some point, it's going to not be me closing my longs. These are swing longs. I'm targeting 26,000. I have no reason to close them. There's the whole trade idea is playing out, but I can look for shorts as scalps and counter trades when it makes sense along the way, and look for opportunities to add to my longs. So we have a couple levels below us. Really, the main idea I'd like where I'd like to add, and this could be a couple days from now, probably not likely to be now, is a sweep of these lows still. I'd still like to look to add a sweep of these lows. If we can grab this low, this would be even better actually. But grab these lows and reclaim them. Be a nice add. Because you're kind of expecting some sort of, if you're familiar with Elliott waves, I'll just put this on the chart really quickly. Old count, current count. Too many folders going on in here. They're fractal. So this is a variation of a count that I had put together down in this range, which was a leading diagonal wave 1, 2, 3, 4, 5. So I still think we need a fifth wave, which is part of the premise for these longs. But these waves are all fractal. So now if this is the start of a fifth wave, well, each of these, this fifth wave is going to be made up of 5 waves. So you're going to have something 1, 2, 3, 4. Let's pull this. You're going to have 5 subwaves, so waves of a lower degree within the 5 waves. That's why you have these different degrees in the Elliott wave settings. But you're even going to have 5 waves within these impulsive waves. So anyways, I was looking at something, I don't know. You could have 5 waves to form a wave 1. Technically, this should be a different degree. And this is just a really rough idea. Just looking at this low time frame structure. And then maybe we get our corrective structure to form the bottom of our wave, subwave 2, giving us our higher degree wave 1 on our way to the higher degree wave 5. And then we have our third wave up within this substructure. So that's what I'm going to be looking to add on if I get the opportunity. I'm not ever going to be adding to my longs up here. I'm completely comfortable to add on retracements. And I'm comfortable with my low time frame range analysis to get me into positions like that. So I'm not going to average up my position by longing here. I like longing on retracements as support. We obviously have some key levels. So, we have local levels, the most local being down towards the VWAP, the impulse golden pocket here. Not a lot of confluence. So I think the more interesting level is, of course, the retest of the range lows. And part of my idea for the sub count here, so let me just give an example of what I'm talking about. I'm going to turn off the Elliott waves here really quick, clean up the chart a bit. All right, so let's take off some lines just to make this clear. So the idea, of course, would be here's a range. So we've impulsed back into the range. Typically, you want to look for that retest of the range lows. So that's something we saw on ETH. Obviously, ETH is running at a different time frame. But let me just give that example really quick, because it's the exact same idea, just on a different time frame, a slightly different structure. So ETH swept the range lows here, came back up, and our impulse, even on the 1 minute chart, I pointed this out on Twitter. We did wash through it a little bit, but our impulse came right off the range reclaim. So we impulse through the range, back into the range, and then we have this range low over here. Price comes back tested as support, and impulses again. So that's always something to look for here on Bitcoin, is for price to come back and retest this range low and impulse. But my thought would be, if we do that, we might get something like this, where we get the ABC and then we come back lower later. So we get the initial impulse, retracement back up to test resistance, and then we come back and sweep these lows later, maybe in a couple days. So I'd be interested in looking at a long here, depending on the structure, but would probably take profits on it locally and then look to add to my swing position if we get a sweep of all this liquidity. Certainly seeing some local structure breakdown here. So now let's take a look at some order flow stuff. At the end of the day, I'm just drawing lines on the chart based on my understanding of how price likes to move and behave, ultimately seeking out liquidity. But we have some tools where we can actually look at what price is doing in relation to volume and orders opening. So a nice amount of longs opening on this move up, not primarily shorts being squeezed. Right at the top here, we do see that short squeeze. So you can imagine which makes sense, that's right at the point of control. There were shorts with liquidations and stop losses here being targeted. That last move up, we see a big decrease in open interest versus the increase in open interest we saw on the way up. So market buying, pushing price up into these short stops, and you see the big decrease in open interest as we make that high, stopping out all those shorts. And we see a lot of longs closing. We're seeing a decrease in open interest as price is coming down. So it's not primarily shorts opening here. Putting the odds in favor of a retracement, certainly in the New York Open. We're also seeing bearish absorption forming between the cumulative volume delta and price. You can see there's some attempt for price to be pushed up here locally, but price is failing to rally. So there's bigger traders putting pressure on price, holding it down here. And I suspect we will get some sort of retracement in the New York Open. You can see here in this last 5-minute candle, a $5.1 million candle with a 2.8 million positive delta. So this is that tick up in CVD, but price didn't go anywhere. So it's being absorbed as of now. I wouldn't call these major bearish absorption, or call this major bearish absorption, but it is trending towards bearish absorption here. But typically, you do well to wait for the New York Open. Interesting, our monthly opens just overhead. Some time point of controls overhead. I'm actually going to collapse these market profiles. Let's do 30 of these. So we have tapped that. I'm just going to do another 30. This is typically the case. I'm just trying to see if our time point of control is aligned with our volume point of control, and it looks like it is, more or less. So again, we're seeing price now grinding down, making this series of lower highs. There is buying pressure coming in, market buying pressure, but it's currently being absorbed. So ETH has retraced to the VWAP just about. Just taking a look at ETH as well. Very nice parallel channel idea here on ETH. On a low time frame. Also have a little swing failure idea maybe here. I typically like to trade around the New York Open. So, the trade setup for me that I would be looking at here, it's either going to be no trade or it's probably a short setup at this point. There's not a lot of sense in me adding to my longs up here. Yes, we could break out and my longs can just carry on. But tapping the major point of control, bearish absorption forming. The ideal scenario, of course, being some kind of push up locally into the New York Open with more defined bearish absorption and then shorting something like that. And that could look like that could look like this with bearish absorption, nice tight invalidation short, or even a sweep of these highs would be okay. I guess it would be even cleaner to come up and sweep these highs as well into the point of control. Something like that. Maybe using a loss of those local highs as an entry trigger. I'm always using risk management when I'm trading. You can always take losses. You just want to take them gracefully. Now, if price just drops, I did actually have a hedge short up here because there was bearish absorption forming. I woke up to some alerts. I'm assuming maybe it was the point of control alert. But as we started ranging and developing some more local price action, the bearish absorption sort of subsided a little bit, and we did start seeing a little bit of local bullish absorption. So I decided to pull my hedge shorts and just wait for the New York Open, which I'm still fine with. And if I don't get a nice trade that I like, I don't need to trade everything. If I don't get a nice position that I like, that's fine. I'll just let it go. So let's take a look at, gonna be looking here primarily. And of course, I typically just have my orders set up and ready to go, depending on what I want to trade. And I just execute them with a market order if I want to take the position. I have my stop loss and everything preset before I enter. So over the next probably 5 to 10 minutes, expecting a little bit of volatility and potentially an entry trigger. The S&P, yes, S&P mini is kind of breaking down up this ascending structure, but I still have some, let's say, bullish ideas, but I mean, they're technically bearish ideas, but some ideas to push up higher here at some point. It doesn't have to be locally. I think I made this count actually back here. This idea of an A, B, C forming our wave 1 in a higher, or wave A in a higher degree count, B, C, something like that would be my analysis on the S&P currently. So it's playing out generally the way that I would anticipate for this type of correction. Although this very well may be a flat instead of a zigzag. Oh yeah, sorry, wrong monitor. Sorry, this is it. So something like this, A, B, C, potentially a flat as well, but I think this all looks quite good for a zigzag. Come up and take this liquidity above the highs, maybe even this high, and then have another leg down. This has been a major target for me on the DXY, this intersection between this ascending structure idea and the 618, just under 100 at 99.14. You know, something like that might be nice. I want to say that I talked about this idea months ago for this move down into the bottom of this ascending channel. Forget when I posted about it. Just keeping it simple. I think it's reasonable to look at something like that maybe in the summer. All right, let's keep an eye on the price here. Yeah, so there's bearish absorption in the New York Open. So I'm hedging short here. Because there's no sense in me staying long while we have this bearish absorption forming into the New York Open after this impulse. Now, I still have my longs, but the hedge offsets that risk completely. So I'm higher time frame bullish, but locally bearish. So there's no sense in. And even now, the bearish absorption is getting more defined. So we might even push higher, and I might actually add to my shorts if we do. In fact, I prefer if we did, but we can see this buying pressure starting to come in here. You can see CVD. I can show it on another tool here to make it a little bit more clear. Let me find the tab. You can see CVD is starting to make higher highs as price is making, it's clearly going to be a lower high. It doesn't mean price can't break out. It just means this is classified as bearish absorption, and looking for shorts makes a lot more sense than longs. Invalidation being taking this high. We obviously have some horizontal support, resistance, flips ideas here. As a general rule, if you're at resistance and you start pumping during the New York Open, it's usually a decent short. If you start dumping during the New York Open and you start to see a reversal, usually a decent long. Counter trading the initial move of the New York Open is always an idea. And that's because pivots like to come in during the New York Open. So I think perfectly reasonable to be looking for shorts here. Of course, coming up and grabbing the liquidity above these highs would be better. But you don't really know if you're going to get it when you start to form bearish absorption. Some nice longs opening here, some shorts closing. Positive delta, 4.4 million. And the whole idea of this absorption is, all it's telling you is there are big traders sitting here with limit sell orders, limit shorts, closing longs, and they're just letting market buying push into those limit sells, which is creating a divergence in this cumulative volume delta, this aggressive buying pressure and price. There's aggressive buying pressure coming in, but price is not going up. It's not making higher highs. And so what you can infer from that is, well, there's big traders filling short positions here, or selling longs to drive price down, likely into some of this liquidity that we're building up below us. But again, anything can happen. So you really just have to trade the data that's in front of you, use risk management, and let the chips fall where they may. There's a lot of nuance to what I said about the New York Open counter trading the move. You know, that's not just, it's not as simple as that, but you'll see a lot of pivots come in at the New York Open. That first kind of 5 to 10 minutes, even first half hour of the New York Open. But we do have, I guess technically we need this 5-minute candle to close, but we do have a technical bearish divergence here forming. But of course, anything can happen. Price could just run these highs and then reject or just break out. And I know that can be frustrating for new traders to learn, is that there are no ways to know what price will do next. It is certainly just a game of probabilities. And so you just use risk management. You're trying to put the, obviously getting your win rate above 50% is always nice. And then getting the risk reward of your trades. So you're making more than you lose when you win. Making it reasonable is the goal to be a profitable trader. I was a little far from my mic. Somebody was saying, can you talk louder? So, you know, this is always kind of interesting. Like, probably going to sweep these highs. Usually Bitcoin doesn't leave equal highs like this. But we do have technical bearish absorption on this low time frame consolidation. Someone's asking what's good invalidation, or what's a nice stop loss here. Well, I'll kind of give my thoughts on how I would approach this. Of course, everyone should trade their own ideas and analysis. So for invalidation, for me, there's two ideas here. One is just above this high. That is what invalidates the bearish divergence in price and CBD. Because if price makes a higher high, well, then that whole bearish absorption idea is invalidated. Of course, there's always a temptation to trade tighter, right? trade above these highs, trade above these highs, which you can do. But if you're not a really experienced trader who can judge whether or not to re-enter, I don't necessarily think it's a great idea to try to run super tight invalidation without a firm understanding of when or why you would re-enter if that stop loss got taken, because the reality is this actually doesn't invalidate anything. So if you ran your stop here, you get wicked out, and really what's invalidated about this short? Nothing. You're just basically placing a bet that the bearish absorption is strong enough to keep you from taking these highs, which is just, you have no way to know that. So if you want to place that bet and size a little bigger, you can, but your stop loss is now not actually at technical invalidation. Technical invalidation is up here. And there's even a caveat to that, which is price could, let me delete some of these lines. My computer kind of froze for a second. There's a caveat to that, which is price could actually impulse through that high and swing failure. We're all familiar with things like the classic BART pattern, and that's another short trigger. So anyways, that being said, the way I would probably trade this the vast majority of the times is invalidation above this high. If we sweep the high and reject, I'm willing to short it again. So I kind of have two short ideas I'm willing to trade at resistance. But why am I willing to take the first short before sweeping the high? Because of the bearish absorption, which makes it much less likely we do sweep the high. So I'm willing to take the short more aggressively. And why am I willing to re-enter right after getting stopped out? The reaction. I'm stopping my trade out when we take this high because we could just break out. But if we reject, then I'm reopening it as a reaction to the rejection. So those are the two ideas I'd be willing to trade. Some people, the initial question I've been asked a lot is, well, if you're going to re-enter the trade anyways, why not just put your stop loss way up here? Well, I don't know I'm going to re-enter the trade, because if there's a breakout like this, I'm not going to re-enter it. So if price had done this here, I'm willing to re-enter. But if it just breaks straight out, I'm not going to re-enter a short, right? If we pretend this structure's up here. So I don't always TP aggressively. I mean, I longed I longed ETH down here. This trade's running at like a 20R. I haven't really been reading chat here. Okay, let me answer a few questions on chat, and then this is just a morning trading session live stream, so I'm not going to sit on here all day just looking at the New York Open. I have some alts. I mean, somebody asked how many positions are you usually in at once. Sometimes lots. I took a long setup on GRT and FTM. Obviously, if alts are coming to key levels at the same time as Bitcoin and ETH, and I'm interested in longing those, well, then I'm interested in looking at some alt longs. And we had lots of alts coming down to support. But I would say if you're, again, a more inexperienced trader, one, you probably shouldn't be trading with real money. You should be practicing with fake money. Trading correlated assets can be really risky because you really need to know how to manage your risk if you're trading a bunch of alts at the same time as Bitcoin and ETH, because everything's correlated. So if you're in a bunch of longs, yes, if they all go in your favor, they're likely to all go in your favor because all the assets are correlated. But if you get stopped out of one, you're likely to get stopped out of all of them, because if Bitcoin's dropping, everything else is dropping, and vice versa. So same thing goes with shorting 5 different alts and Bitcoin at the same time. You need to manage your risk, and for most people, I'd say trading 1 or 2 things is probably where you should cap it, and just look at the things you really want to be trading, instead of trying to trade 20 different alts. Okay. How do you read bearish and bullish absorption? I'm not going to get into that now, but I have educational content on that. I guess a lot of that stuff on CBD is in the members group, but yeah. So anyways, we even have a little bit of local bearish absorption maybe forming between these highs. Hard to say if that's going to play out, because we need some of these candles to close. But I think the short ideas here make sense. Maybe we come up and sweep this liquidity. If we sweep these highs, I will be stopped out. If we reject, I would consider reopening. But often it's a good idea to come in and ask questions in the Discord. Like if you're asking like the website's coinalyze.net is a free website to look at CVD divergences. But come join the Discord. Even in the public channels, a lot of times people will just be able to answer some basic questions that you have, or I'll be able to answer them. But I would say, if you're you're going to have to take some time to learn how to use these tools and how to interpret them correctly. Some of these tools are going to do more harm than good if you're trying to use them and you don't actually know how they work and what they're telling you. So, no, I'm not going to take a altcoin request in this live stream. This is literally, I woke up at 5 in the morning, because I do, to trade the New York Open and to prepare before it. I'm trading it, and then I'm going to go do a few things and come back later. So, I was on the wrong screen again. But anyways, so I'm going to actually wrap up the live stream, because I've put on my position. We'll see how things develop. I'm not going to sit here and stare at the 1 minute chart all day. I have targets. I'll talk briefly about the targets before I wrap up. So I have targets down towards the VWAP and obviously a retest of these range lows. I'm going to keep an eye on order flow as we continue as price progresses. If we start forming bullish absorption, I'm going to pull some of this short off. But I'm still going to wait for major targets to long, and probably anticipating something like this, and then maybe continuation, but we'll see. But just, you don't have to marry an idea that you made. Like, I don't have to plan out the next 3 days of trading and stick to it exactly, because I can look at live data, right? So we'll see what things look like when these levels approach. If it makes sense to hold this short, if it makes sense to close this short, and go from there. All right.